Hello guys and welcome to this new Excel tutorial. In this video I'm going to talk about discounted cash flow or DCF, which is a valuation method used to estimate the value of an investment based on its estimated cash flows. And DCF is the practical application of the time value of money, which states that money today is worth more than money in the future. To calculate the discounted cash flow, we are going to use the following formula, which is, as you can see here, cash flow for the first year divided by 1 plus r to the power of 1. So basically here 1, 2 until n represent the number of years, and r is the discount rate, which can vary depending on the projects. In general, we consider the discount rate as the return you could earn from another investment with similar risk. After that, we are going to calculate the NPV, which stands for net present value, which is the difference between the sum of discounted cash flows and the initial cost, which is the money invested at time t0. When it comes to NPV, we have three different cases. We have if NPV is positive, we accept the project. If NPV equals to 0, which means break even, so there is no added value. If NPV is negative, we reject the project. In our case, we are going to use a rental apartment in no tax real estate market like Dubai, and we have a fully furnished one-bedroom apartment with a size of 750 square feet, the purchase price of $250,000. The price per square feet is the purchase price divided by the size. We have purchase fees 4% of the purchase price, the broker fees 2% of the purchase price, and we have some other fees at $2,000. We have the rent is estimated at the first year at $18,000, and the year-over-year growth for the rent we have 5%. We have fixed yearly service charges of $3,000 and yearly insurance of $1,000. The holding period is estimated 5 years, and the renovation fees before selling the property are estimated around $10,000 with market appreciation of 35% that will give us the following selling price. Here we have the table that represents for us the different values. So here we have the years. For our example, we are estimating that we are getting the rent in one check at the beginning of each year. So the beginning of year 1 is time t0, then the beginning of year 2 we have t1. Okay, so from here to here we have 1 year, 2 years, 3 years, 4 years, and 5 years. So at the end of the 5th year or the beginning of the 6th year, we are going to sell our property. This row represents the gross rent. So as we have said, for the first year it will be around $18,000. Then we have 5% year-over-year growth. Okay, so here we have G5, okay, which is the gross rent for the first year multiplied by 5% plus G5. Same thing for next year and also the final year. We have fixed yearly charges around $4,000 for all the years, which represent the yearly service charges plus the yearly insurance. So the net rent is equal to the gross rent minus the yearly charges for the different years. Here we have the purchase price plus the purchase fees plus broker fees and plus the other fees, and it will be a negative number. So here for the cash flow we have the amount spent or invested at time t0 plus rent. Then we have the net rent for the remaining years. Okay, so the second rent, the third, the fourth, and the fifth, and at the end of the 5th year or the beginning of the 6th year, we are going to sell our property with this price minus the renovation fees. Here we have the chart that represents our cash flow. So at the beginning we have minus 253,000, all right, which is the entry price plus different fees in negative number plus the net rent. Then we have positive cash flows for the remaining years until the selling price. And as we have said, to calculate the discounted cash flow in this formula, so we have the cash flow in the first year multiplied by 1 over 1 plus r to the power of the year. So here we have the first year, the second year, then we have the third, the fourth, and the fifth. In our case, this is the cash flow at time t0, so this is C0. Then we have for the first year, as we have said, we have 1 divided by 1 plus the discount rate. In our case, we have chosen 8% to the power of 1. So basically here we have the power, which is H3. Then for the second one, we have 1 divided by 1 plus the discount rate. which is G13 to the power of I3, so which is 2. Same thing for the third year, the fourth year, and the fifth year. So to get our discounted cash flows, for C0 it will be the same. Then we have for the first year it will be the net rent multiplied by the discount factor. Get our discounted cash flow, and same thing for the remaining cash flows. So as we have said, to calculate the NPV, we have the sum of the discounted cash flows minus the initial cost, right? So in this case, we have the initial cost, it is a negative number, and we are going to do the sum of the discounted cash flows. So here we have the NPV with Excel formula, right? So here, as you can see, we have NPV, first parameter will be G13, which is the discount rate, right? And then we have from H9 to L9. So we have the different cash flows plus G9. So in this case, G9 or G11, which is the same, it will be added as it is a negative number to get our NPV. Or the second one, which is calculated, we are going just to do the sum from the beginning until the end, right? So we have this plus this plus this plus this plus this plus this one, and we get exactly the same value. As you can see, we have an NPV which is positive. So in this case, we recommend to proceed in this investment. Whereas for the IRR, right, it will be directly using the formula. So in this case, if we want to put the discount rate equals to the IRR, we get an NPV which is equal to 0. So basically, the value that will put the NPV equals to 0 is the discount rate equals to the IRR. For our example, we have chosen discount rate which is lower than the IRR, but if we choose value which is higher, we get a negative NPV number, which means we don't recommend to proceed with this investment. So that's it for this tutorial. I hope that you have learned new things. Thanks for watching, and see you in next tutorial.